Good day everyone, this is your European Open Briefing for Tuesday, October the 4th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So sterling is once again the main topic of the day. The pound hit a fresh 31-year low on renewed Brexit concerns. This comes after British Prime Minister Theresa May said that she will trigger Article 50 in March 2017. And earlier today she said that it was important for businesses to know what the Brexit timetable is. So this pretty much puts the Brexit plans underway, and this is obviously creating fresh worries in the markets. The dollar was another big mover today. It's extended yesterday's gains on the back of solid US data yesterday. It climbed to a fresh 2-week high against the yen. This comes despite some fairly dovish comments from the Fed's Dudley. And the other main news of the day is the RBA's latest monetary policy decision. The Reserve Bank of Australia held rates at 1.5%, but we saw the Australian dollar weaken slightly after the decision. Now let's have a look at the pound. So we can see here the pound tumbled to a fresh 31-year low of 1.2756. It's fairly likely that it will hit fresh lows during the course of the day. And this comes after the British Prime Minister gave more details on the government's Brexit plans. We know now that Article 50 will be triggered in March 2017. We also had the UK Finance Minister Philip Hammond provide some reassurance to the markets that he will protect the UK economy from the turbulent times ahead, but he also said that the government will not stick to the previous government's austerity plans. Therefore, they will take a less tough stance on reducing the UK's budget deficit, and this should help soften the blow from Brexit. We also had another set of strong manufacturing PMI data out of the UK yesterday. This, however, failed to lift the pound, as the main concern is pretty much what's happening with Brexit. And again, Philip Hammond's comments didn't really do much to reassure markets either. So I guess the markets just want to know further details about the Brexit plans, particularly whether or not the UK will retain access to the single market. This is the primary concern for businesses, and based on what we heard so far, what the government has said, what the British Prime Minister has said, that taking control over the UK's borders and prioritising immigration, that will be the key focus, and this will inevitably will likely lead to the UK losing access to the single market, as European leaders have repeatedly said that it's unlikely the UK can stay in the single market if there is no free movement of people. The euro, on the other hand, has underperformed against the dollar. This is mainly due to the dollar strength, but also we saw Deutsche Bank's shares tumble yesterday in US trading. German markets were of course closed yesterday for Unification Day, but as it's dual listed, its US shares fell once again, as we've yet to hear any confirmed comments that the bank will end up paying a much reduced fine with the US Department of Justice. So the dollar tumbled to below $1.12. It was last trading around $1.1160. Against the pound, though, the euro hit a fresh 3-year high, as the pound, of course, has its own troubles, and it hit a 3-year high of 87.8755. So quite a contrast there. between the pound and the dollar versus the euro. Now looking at the dollar-yen pair, we can see here that the dollar has been steadily rising since late yesterday. It broke above 102 yen for the first time in almost 2 weeks. This comes after some very positive ISM manufacturing data. It rose to 51.5 in September from 49.4. Expectations were for 50.3. And this, we've also had some other fairly strong data recently, suggesting that we could see a rate rise as early as December. The next meeting is in November, but of course this is just a few days before the US election, so it's unlikely the Fed will do anything in November. The William Dudley, New York Fed president, did say though the Fed needs to be cautious, because if there was to be another recession, the Fed wouldn't have much scope to cut rates, but the dollar seems to have ignored this, and it's pretty much been firming throughout Asian trading today. Now the other main news was from the Reserve Bank of Australia. They held rates at 1.5% at their monetary policy meeting earlier today, and it was much less dovish. In fact, you could say maybe their statement was slightly hawkish, because they gave no indication at all as to whether or not they would cut rates again. And we also had some better than expected building approvals data, and this underpins the overall strong housing market in Australia. And once again, this puts into doubt whether or not the RBA would cut rates again, given that the economy is holding up fairly well under the circumstances. We saw the Australian dollar move up to a high of 0.7690, just ahead of the RBA's decision, but it seems to have slipped back towards the late Asian trading, early European trading, as the RBA statement didn't really provide any surprises. So we saw the Aussie just pull back a little bit. But overall, the outlook for the Australian dollar is likely to be bullish, given that another rate cut is looking less and less likely. It's going to be a fairly quiet day in terms of the economic calendar in the Eurozone. We just have the producer prices coming up later in the morning, and that's pretty much it for the European session. We're going to have the latest dairy auction, so that will likely put the New Zealand dollar in focus, and that should come at this is 14 hours Eastern European time. And then in the US session, it's looking pretty quiet. We don't have any major data apart from the API weekly crude stocks, so that should bring crude oil prices back in focus. And that's pretty much it for the rest of the day. And that's it from me also. Thank you very much for watching, and have a great day.